Hey everyone, Couch Investor back with another video for you today. So in today's video, we're going to talk about Fiverr. I covered this stock a couple of weeks ago. If you haven't checked that out, it's going to be in the top right corner. I said that Fiverr is a must-have in your long-term portfolio. Q1 earnings report came out before the market opens, was pretty good. That's why the stock right now is trading at about 3% higher than it was before. Pre-market trading, that is. So in today's market, it could be good, but during the day, the stock could be down another 5%. We wouldn't know. So in this video, we're going to have a look at their earnings report. We're going to talk about what this could mean for the future because they beat earnings per share, revenue estimates, and they actually raised guidance for the full year. So pretty good on that front. We're going to have a quick look at the graph as well. But before I do so, I just want to thank everyone that has been subscribing lately. If you haven't subscribed to this channel, maybe hit that subscribe button. And if you like these videos, leave an early thumbs up as it really helps me out grow the channel and get my videos out there. I would also like to thank the Motley for sponsoring this video. The Motley is a company that provides investing insight and stock recommendations for investors of all skill sets and risk levels. You guys know I love finding new investing tools and resources to help me find the latest growth stock and innovative company. And right now I have a discount for one of my favorite services, the Full offers. Through the Motley Fool's stock advisor service, you get access to a ton of expert stock picks. Every month you'll get 2 picks that are aimed at growing your wealth and to help you realize your financial goals. Stock Advisor's average stock picks have returned over 500%. If growing your money is something you'd like to do more this year, you can visit www.fool.com/couchinvestor or click on the link below for access to my special offer and decide if Stock Advisor is right for you. Now let's dive into this. Right, so quick look at the graph. Just like most growth stocks that were maybe a bit expensive with high valuation, got hammered heavily. I think this stock is down 45% since the highs at the beginning of February. Right now we sit at a previous resistance, current support. Well, let's hope this support holds. If not, we could go lower to the $150 range or so, but you will see that this earnings report, if you're a long-term investor, you shouldn't really care about this short-term volatility. Right, before we jump into the earnings report, just a quick reminder, I hold Fiverr in my portfolio. I hold it for a very long time, for the next 5 to 10 years at least. So this short-term price fluctuation for me doesn't really matter. Will I add? I already added, I think, a couple of weeks back. Will I add today? I don't think so because my position is already pretty nice and pretty well built up. So let's jump right into this. Right, so they had a massive start to 2021. They kicked off the year with one of the highest Q1 revenue figures reported in their history, with revenue growth accelerating 100% year over year. Pretty amazing. Now this point right here is pretty important because this is going to be bigger and bigger each and every year. So Fiverr Business buyers purchase more frequently and more expensive gigs, not the football player, on Fiverr Business compared to the marketplace, and on average spend 3 times more on the Fiverr platform. This point right here about subscriptions is something I didn't talk about before, so we're going to talk about this in this video because it's pretty good. It's a pretty good aspect to the whole platform and the whole ecosystem. So the subscription is now available in 25 categories, so still a long way to go, tripling from 8 in Q4 2020, and milestones are now open to all Fiverr community members. And last point, they increase guidance for 2021. So they expect business momentum to continue and is upgrading guidance for 2021 from 46 to 50% to 59 to 63% revenue growth. Right, so revenue up 100% year over year to $68.3 million. So yes, these numbers are still pretty small if you compare it to the larger companies. That's why you're paying a high premium for this company because the year over year growth is pretty high. Right now, I think the price to sales ratio is around 30. So yes, it is expensive, but it is a high growing business. Gross margins are at 83.1% GAAP and 84.1% non-GAAP. The spend per buyer, which should increase year over year, is now at $216, up 22% year over year. GAAP net loss at $17.8 million and adjusted EBITDA at a loss of $0.7 million. Right, so outlook for Q2 is revenue at $73 to $75 million, an increase of 55 or 58% year over year, and I think 10% quarter over quarter. Now for the full year, like we said, guidance is going up, so to $302 to $308 million, which is also an increase of close to 10% from their prior guidance. Right, so overall the numbers are pretty good. Now, before I jump into the subscription part, I want to say something, because yes, a lot of people are still skeptical about what's going on with the economy and everything. Are people still going to use all those services, those work from home services, as we move away from the pandemic? In my opinion, the answer is clearly yes. I don't see people going out of their way again to the old times, let's say, and not using services like Zoom, Fiverr, or any other company that has gained immense popularity during the pandemic. We can see this with Fiverr's business as well. Lots of people might have lost their job and are now on Fiverr and are making lots of money because, well, they're good at their job, so why not work for yourself? Put yourself on Fiverr, expose your talent to a broader market. I do see this continue, and this will be a continued trend moving forward. Now, from the business side as well, you will see companies work with maybe professionals that work on Fiverr. They've acquired, I've talked about this in my previous video, another company called Working Not Working. These companies are working with the likes of Netflix. So this isn't something new, but this will be something that will continue in the years to come. So a quick look back at the subscription part. So they expanded this to 25 categories. So how does this actually work? So I don't know, you probably can't see the picture right here, but it says here, I will be your monthly social media marketing manager for a certain price. And then you can choose 3 months or 6 months. Now, why is this super cool? So first of all, subscription model is always the best model. So if somebody chooses 3 months or 6 months, then the seller himself can know, okay, for the next 3 to 6 months, I'm settled. But the company, Fiverr, can know as well, oh, we have X amount of people that are subscribed to a service, so they can already calculate what kind of revenue will come into the business. This is great. Adobe, since they switched to a subscription-based model, has been growing like crazy. And that's great for shareholders as well, because you can already see and look into the future, let's say, which is great. And last point, things I touched in my previous video as well, is expansion to other markets. They've been doing that pretty well. The UK, Australia, other countries in Europe as well. We will see the progress of that expansion and that exposure maybe in the next couple of quarters. Right, so overall, pretty happy. I think this was a pretty impressive quarter for Fiverr, and the fact that they raised guidance for 2021 says a lot. So I'm pretty happy shareholder and happy Fiverr customer as well. Do you hold Fiverr? Do you use Fiverr as a service? Let me know down in the comments below. And that will be it for this video. If you liked it, consider leaving a thumbs up. If you haven't subscribed yet to this channel, maybe hit that subscribe button. And as always, guys, take care, stay safe, and see you all in the next video. Bye bye.